The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. How are you doing today? Audio and video coming through okay? Fantastic. Well, let's go ahead and get started. So glad to be back on. Another series in Be the Sniper or Be the Target. Your choice. You got to make it today, and we're going to talk about a few things to help you out with that. So obviously, there's always risk in investing, and you need to know what those risks are and, proceed wisely. One, I had a great family vacation. Been going, and had much needed time away. We built a amazing sandcastle. So went scuba diving, and John, of course, helping out with my PowerPoints, always thinks he's the highlight of the vacation. The highlight was watching him try to battle Vader on my VR headset that I brought over to his house. But this is the sandcastle that we made. So pretty cool. Got my mom, she came out with us, my daughter and my son. Went out to South Padre. And we also made a Death Star as well. So, who's wanted to make a sandcastle like this before but didn't know how to? All right. Well, my son wanted to make an amazing sandcastle, and I've always wanted to make an amazing sandcastle. I've never made an amazing sandcastle before. So, what do you think I did in order to learn how to make an amazing sandcastle? Google it. Yeah, that's part of what I did. Yeah, somebody says, took a class. I actually did that. So I went out there and found somebody who they pay you to teach you how to make sandcastles. And he came out and showed me. We went through it. He brought out all the equipment, these buckets. We cut the holes in the bottom of the buckets. We greased them inside. Then we packed them, and you had to make a solid base. See that huge base? We had to pack down the base with water. And we had like a 17-gallon bucket, then a 10-gallon, then a 5-gallon, and literally just filled them with sand and water until it was like just almost like cement hard. And then you just took the buckets right off, and you could carve an amazing sandcastle. So I needed the right tools, I needed the right knowledge, I needed somebody who had been there, done that to help out. So, but I think we had some pretty good success, and my daughter got into it in all sorts of awesome details. But we wanted to make an awesome sandcastle, and guess what? We did that, and that took us like maybe an hour and a half to make that sandcastle. And then Judah wanted to make a Death Star, and so guess what? Learned how to make a Death Star. So they started out with a bucket full right there, had this little simple plastic thing that makes spheres, carved it out, ended up with a pretty sweet Death Star. So, and that's how I try to approach, everything that we do. Very happy boy right there. Is, if I want to do something, I want to do it well, and I find somebody who's done it. I find out what tools they use, and learn from them, right? And spend the time, practice, everything else. Well, a lot of y'all have been doing fantastic, as I've heard. A lot of y'all have been getting qualified. We just had like 4 more qualified today for WeLu. So I wanted to give a major congratulations to everybody who's been qualifying. So congratulations, props. I know it's not easy to do. Okay, I mean, it's easier than other qualification companies, but it's still not an easy task. But I want to remind you of something, okay? Some of y'all are making the mistake of using WeLu as your practice account. Anybody in here guilty of doing that? Just hopping right in with WeLu, using that, and like, hey, if I can pull it off in WeLu, then they'll give me money. That is expensive. Would you agree? Can it almost get addictive? Reset, 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 reset. Okay. So, I mean, it's a lot less expensive than using real dollars, right? But it's a lot more expensive than using demo. And I know what some of you are going to say. I don't want to use demo. It doesn't get me anywhere. Anybody feel that way? Like using sim? You want to get funded? So you jump right in. All right. So if you wanted to go play for a professional team and they had open tryouts, would you just show up to the tryouts? Let's say you had to pay a $50 fee to get in the combine. Okay? Would you just pay the fee and go to the tryouts, or would you actually practice before you went to the tryout? Some of y'all say practice. Some of y'all are like, I probably would just go, knowing me. But I'm being serious. If you were trying to try out for a professional team, and out of all the people, I mean, and Esteban makes a great point. 90% may just show up, but I want to be the 10%. So do you think if you want to be in the 10%, that you're going to make it spending $75 over and over and over and over and over and over and over again on resets? Like you're gonna spend all your money and you won't even be able to pay for your membership to keep going. Some people are hearing me and not wanting to respond right now. So I'm challenging you right now to, you might need to cancel your Lilu account if you're not making it right now. That's okay. Lilu's still going to be there in 2 more weeks and 3 more weeks. But if you're not going to be because you spend all of your money doing reset after reset after reset, then that's not really getting you there faster. Would you agree? If anything, it might be psychologically damaging you and holding you back. I mean, is anybody hearing what I'm saying? Has anybody felt this and maybe a little guilty of this themselves? And I'm doing this to talk to you to help you. Like, some of you need to cancel your Lilu account, okay? Or if you fail it again, you need to cancel it, and you need to do sim. Get it down in sim. You got the monthly fees, you got the reset fees. I mean, it's just like, you've seen this work. You know it works. You've seen plenty of us doing it. We came in this morning, called out multiple winning trades. I came in this evening, called out 2 winning trades, and called 1 trade not the trade. So what I want you to tell you is canceling Lulu is not giving up. Canceling Lulu is saying, I'm not going to give up. I'm going to make sure I trade sim. So somebody asked me, how do you trade sim? So all you do is you get a data feed from Ninja. You just sign up for Ninja, like I show you on step 1. And if you've used it, just get a, while you're funding the account or getting a legal account or whatever, you could always use a second email address or something to get another thing, okay? And then you just put it on Sim. So you can connect with a NinjaTrader data feed. And it is free. It costs you nothing. And what you need to be able to do is go in and do 3 consistently. And Sim is not any easier than anything else if you treat it like it. But what if you said, I have to pass Sim and make say $3,000 in Sim before I let myself do another Lilu account. So now there's a risk reward to it. Now there's actually a mental, like, I got to be up $3,000 before I can actually pull this off. And if you go in and you mess up on Lilu, then you know what? Go back and make yourself do it again. Make yourself have to make 3,000 in sim. And I'm not talking about I went long, I got lucky, and I made it. But the actual, like, going in and placing the trades and being careful and learning your mistakes, learning to pull the trigger when you're supposed to. Some of y'all have got almost scared to pull the trigger because you've done all these resets. You don't want to do more resets. So you're missing out on good trades. You know, we had a trade tonight on ES I called out. Let me see. Let me show you this. And it was right here. And some people were taking this third bar swing. And I said, don't take that trade because it's going right into an NQ wall on NQ. And I know some people took it. But I said, if whether you were in the long or not, be ready to go short on this short ES trade. And mentally, like, because I knew that some people would not be prepared if they took that loss to go ahead and hop in that short right away. And so I called out, be ready to go short right away. Even if you're in that long and you're going to lose, as like, get out of that trade and go short. We hopped in. Obviously, we won the trade. I mean, some people says, I've never felt like I was good about, taking tests. I'm like, well, you know what? Trading is a test every single day, isn't it? I mean, and then more than anything, it's a test of what? It's a test of you. Right? So I just want to what I want to sort of, it sounds weird, but give you permission. Give you the concept to give yourself permission to say, I can take a break from Lilu and go to demo and get this down. I don't want to go broke resetting my accounts where I can't even continue. So if it takes me 2 or 3 months to get this down, it's going to be worth it. I mean, this is tonight. I'm up $3,500. That's just tonight. Okay? It's worth it. Doesn't mean you're going to do it, but if you don't do it the right way, you're not. So give yourself permission to go to sim and say, I got to make $3,000 before I can put myself back in Lilu. And if you're new and you're just starting, do not start with Lilu. Don't go straight to tryouts for the pros. Practice first. It is worth it. It saves you money. It lets you learn lessons. It gets you in the right frame of mind. I mean, a lot of this is psychology. 90% of this is psychology. I challenge most of you to take the Mind Mastery course before you ever go in and do the Lilu. Because your mind's going to mess it up more than anything. Would y'all agree with that? I mean, it's big mental game. And think about this, get to 3K in sim. How long did that take? Go to Lilu, expect it to take the same amount. Do it right. Don't rush. Don't stress. Do the 10-day minimum or don't push for it to be the 10 days. Just the 3K before your next monthly Lilu bill. You worry about that and you spend your 10 times as much on resets and getting nowhere because you're trying to get to 3K, 3K, 3K. That's not healthy. So you need to treat sim like it's live, then treat Lilu like it's live. Then you'll be ready for actual live. But if you can't do it in sim, you're not going to do it in Lilu. And if you can't do it in Lilu, you're not going to do it in live. So we got to get your mind in the right space. So some of y'all need a mental reset. Who agrees with me on that? Some of y'all might need a mental reset. And you've just been hitting reset, 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 but you've just been resetting your account and not yourself. So reset yourself to sim and get yourself in the right mindset. It is worth it. Okay? Does it feel better to know that you're not the only one? Because I guarantee some of y'all think you're the only one going through and hitting that reset button 20 times over. And you'd be surprised how many dozens of people are like, yes, you're right, yes, you're right, yes, you're right. I've had people do it 1 time, 5 times, 20 times, and more. So it's not just you. Okay, so let's get you in sim, let's get things going right, and then let's get you in Lilu. Yeah, I mean, can you afford to keep resetting? It gets really expensive. So let's get it down. Okay? So make $3,000 in sim. And then you can go back to Lilu. But don't spend any money while you're practicing. Don't just use Lilu as a demo account. You're just wasting money over and over and over again with resets. And monthly fees on top of that. Master it. Be profitable in demo. It takes a lot of discipline to stick to your discipline in demo, doesn't it? That sort of sounds funny. But it's almost like you have to be more disciplined in demo because you don't care as much. Like, focus on it, do it right, 3 and done. But if you can't make $3,000 in demo by following the rules, then don't let yourself do a Lilu account. One of our best traders, Craig, if he makes a mistake, you know what he does? He stops trading for the entire day. And he is one of our best, most consistent, like 90% plus profitable traders. He sends me a spreadsheet every single month on every single trade, all the stats. And I mean, if he makes one mistake, he says, I can't trade for the rest of the day. Many of you have spent more on Lilu resets than it takes to fund a live micro account and already be trading live and mastered in demo, then you'd move to live and micros and everything else. But if you'll just, because here's the thing, he's learned if he makes himself stop, he remembers the mistake and doesn't repeat it. If he just keeps going, then he blows off the mistake and he's bound to do it again. And you learn to take those no-brainer trades, like James says, like Lori talks about. The best setups. Like I was talking tonight in the room, and I was like, hey, don't take this trade. NQ's going right into a wall, but get ready for this short. And if you're in it, get ready to take the loss and get ready to go short right away. We hopped in, boom, profitable on the short. So discipline. You might need to practice some discipline just by going to sim. I mean, if you're paying so much that you can't pay your monthly fee for Apex because you're paying so much money in the reset fees, you're doing it wrong. That's called practice. That's training. That's your tools. So the resets should not be over and over and over again. I get it. It can get addicting. Anybody feel the same? Like it sort of gets addicting. Just blew it, reset it, blew it, reset it, blew it, reset it. And it almost becomes where you lose your discipline because you can reset it. Right? You're like, if I mess up, I just hit reset. But then all of a sudden you start doing the math and you're like, 20 times 7, that's $1,400. So how many of you don't follow the rules and don't stop at net 3? You're focusing on that threshold. You're trying to get back to 2,500. So Abdul's got to where he gets to 2, he stops. So yeah, now a lot of y'all have the things I sent out, right? What do they say? Pay to be patient and break your rules, lose your house. Jay asked, does it matter which instrument you use to practice? ES, NQ, YM, whichever one you're going to actually trade with. Practice with that one. Karen wants to get her net 3 by 10:30 and be done. So I'm just trying to tell you all this because I know that some of y'all are struggling with this and you need to hear it, and you're going to reset yourself out of trading, and I don't want you to do that. I want you to be successful. And you can get caught up in wanting to get funded so bad that you lose sight of, I need to be disciplined. And maybe I need to reset my mental aspect, go back to sim, get things down, and then move forward. And we have people in here making it. But if you had to, if you're going to do 30 resets to get one qualified account, there's a good chance you're going to blow the qualified account anyway. Right? So you want to be able to go in there and knock it out. So master, be profitable, demo, then go to Lilu and try to qualify. But right now, some of you need to take a pause on Lilu and go back to demo and sign up later. Okay? So I want you to be successful, and I know some of y'all are going to, if I don't tell you, if I don't call you out, you're going to keep going, and you're going to run your ability to get there. Yeah, got a sim like live, got a Lilu like live, then live is a rerun. Exactly. So is this good for a bunch of you? Hearing this message? Did you need to hear it? Awesome. I'm getting a lot of yeses and thank you and excellent. So I want y'all to be so successful, and I don't like hearing like I've already like reset 20 accounts. I'm like, no, let's get back to sim. So I figured this needed to be a topic of tonight's webinar. So once you're done practicing and you're ready for the real world, that's when Lilu is ready to take it on. Okay? All right. Let's talk about summertime trading a little bit. Okay? Summertime trading can often be much slower. Who's found that out over the last week and a half? All right. Now, are the trades still there? But do you have to be even more patient? Okay? Now, what I'm going to tell you is the same thing I told people back like around Christmas time when it was really slow. Is when you learn this patience, and what's cool is you get to spend time reading the market when it's slow. You get to think ahead. So instead of, pardon me, instead of watching the paint dry, okay, this is what a lot of y'all are doing, be looking and going, okay, so if this happened, what would I do? If this happened, what would I do? Is there anything in my, get really good at going through the questions that I've taught y'all to ask before your trades. Okay? So me and Lori talk about it. Like a lot of times she's talking just so she doesn't trade. Right? I mean, you need to be literally looking at the charts. And if you need to pull up several charts, whatever. But looking for is a reason to not take a trade if a long order appears, a reason to take a trade if a short order appears. But you got those questions and get really good at asking them. Because when markets get fast, and they will, you need to be able to fire like on the turn of a dime, right? So slow markets will actually not only improve your discipline, but improve your ability to process what's on the chart faster and take trades faster when markets go fast. And I was telling everybody this like in December and like early January, and I'm like, I know it's slow, but stick with it. Be patient. Spend your time asking, looking at the charts, because you're going to need it. And then February and March hit, and boom, did they ever need it? It was insanely fast. Okay? So just let it build your patience. And some people call patience long suffering. So just make it where you're looking at what to do. I mean, if you got to explain to your dog what's on the chart, then explain it to your dog or come up with something. Get a soundtrack. I like listening to the Guardians of the Galaxy like tapes that the Rocket Man uses or whatever. Listen to music to help you out. But be thinking. Be ready. Okay? And I sat here for like 45 minutes before I took a trade, and then I took a couple trades, and bam, there's $3,500. Okay? Now, it's an election year. We got COVID. We got Brexit stuff coming out again. Okay? We got all these riots and everything else that's happening. There is going to be plenty of volatility this summer. There was plenty of volatility today. Okay? There is so much going on in the world right now to move the markets, you don't have to worry about it being a flat summer. Okay? So it's going to keep moving. Some days are going to be slow, like just slow and painful. Your job is to survive those days, take the best trades, and be here for tomorrow to make more trades. Okay? And improve your skills by watching the market and is this a good trade? Is this not a good trade? Why? And, have a pen and paper and mark why, and then see what happens next. Now, y'all know we got like ODD or standard divergence, right? Let's talk about that a little bit. Yeah, slow days, trade NQ, crazy days, trade ES. Really crazy days, don't just sit there getting jumped over in NQ and complain. Switch over to ES. That's another thing to do, by the way, against summer days, is focus on ES. I mean, you maybe get jumped over in NQ. Does anybody have that happen? So, yeah. But ES, you usually get filled without a problem. Well, jumped over means let me see if I can bring this over here. All right, this is a NASDAQ DOM, okay? It means it didn't fire, is what it means. But you see how wide it is between the buy and the sell? There's even like empty spaces. If you have a buy order there, it could just jump right up there and not even fill your order. And this is why, I mean, like one contract, 1, 0, 1, 0, 5, 0, 2. You see that? That's why your orders are getting jumped and not filled. Okay, now NQ is very helpful because it will lead ES. I talked about that tonight in the Elite Room. When I was going over, don't take this specific trade because NASDAQ's running into a wall. Yeah, and so not many people are going to get filled. But we go over, we look at, say, the S&P, and look at its depth, then, we got 16, 20, 30, and you'll have a lot higher even during the day. So there's a lot more volume, you're more likely to get filled. That's why a lot of your orders are getting jumped on NASDAQ. Okay? Doesn't mean you can't trade it. It just don't get all upset about it and learn to focus on ES at the same time. NQ is always like that. It's always has low liquidity. It's been lower ever since coronavirus and all that. ES liquidity is actually pretty low compared to what it usually is. Usually you'd have like hundreds of contracts on there at night. So then you're at all-time highs, so there's not near as much memories of traders firing off trades, all that stuff. I'm usually in the elite room the night that we have a webinar. So I'll come over the night before, like I'll come over like an hour or two before the webinar. Somebody asks when I'm in the elite room, and that's fine. All right, so let's talk about divergence, because I've seen some misconceptions on divergence. Okay? So if you want to get a technical definition, when the price of an asset is moving in the opposite or in opposition to momentum and volume, when the price is moving opposite of what volume is shown, it can show potential exhaustion, a pause, a retrace, or a reversal. Okay? The big thing here is to remember it's a marathon trade. Say it's an uphill run and it's running out of steam on each burst. And I want you to really focus on this. A marathon run, uphill run. So it's going up and then it keeps going up. Okay? Not it's going down and then it goes up. So we got to look at numbers that are going up and then up again. So the market goes further on less momentum. Either it makes higher highs on less momentum or lower lows on less momentum. Don't worry, I'll get to pictures here soon. You can have double divergence, you can have triple divergence. It is not always reverse at divergence. So you combine it with other edges, such as sniper edges. You know, when you think about the sniper, is like waiting for all the edges to line up, the wind, the visibility, the angle, the terrain, and the specific setups that we use. Combined divergence, along with potential exhaustion and other edges like order prints exhaustion, trapped orders, that's when we look at getting in the trades. Okay? You want to stack the odds and the edges in your favor. So now let's look at a couple charts. And these are here just from the last, well, I got some from the last couple days and I got some older ones too. But notice how this is going up and this is going up. Okay? Like we got 20,000, 7,000, 2,000. Do you see that? Higher high, higher high, higher high. Okay? That, and then all of a sudden I get a trapped X box with, on top of that, a mini mag on a reversal bar. Now I got a short. And it's profitable, just like the OD divergence long we took the night in the room. I also have divergence. Notice I'm making higher highs with lower DR. So it went higher and then it went lower. It went higher and then it had a lower high. As the market's making new highs, DR is making lower highs. I like mine to touch because it makes it where it's easier to see. But if you don't, you can just click on the indicator and let's see here. If I go down to let me try to find it. Deviation reversals. What do I have that on here? There we go. If you want to make them thinner, then you can turn off the auto bar width. Set it to false. Right there. Okay? So I like them thicker because I think they're easy. It's easier to see a higher high and a lower high. But totally up to you. All right. Now, one thing I want you to know, higher highs, higher highs, higher highs. Do I compare this number to this number? Like this 7,000 to this 20,000, would that be a number I compare? No, because it's in a range, exactly. So if it's range bound, or if this was heading down, then it wouldn't be part of an uphill marathon, right? Like this is its whole new run. So if it was heading down, I wouldn't use the number to compare to. If it's heading sideways, I wouldn't use the number to compare to another number. It has to actually be moving to higher highs. And the distance is really far away. But the number one thing is it's going sideways or downwards. So this would have to be moving up for me to use it to compare it to this one. That wasn't moving up. It was up, down, up, down, up, down. Okay, I don't use that. And a lot of y'all are going in and you're looking at every OD number and trying to compare them, but you don't compare a downtrend OD number when it was going in a downtrend. You have to only compare numbers going in an uptrend. This right here, this is a kink in the hose, and it's wanting to start, you want to start comparing the kink in the hose. Well, there's the first burst out of it, and then it explodes up. Okay, so that's divergence. Has everybody got the idea of divergence? Higher high, higher high, higher high. We had a trapped X box, reversal bar. The number is at least ideally 50% or less. 80% is our max, but the lower the better. The number of bars doesn't really matter. I mean, ideally it's closer in price. That always makes it better. But this bar, these 10 bars could happen in 1 second with barely any volume. And these 3 could have taken an hour. Right? Because it's not based on time. So we do like it when they're closer in price. Now here we got lower low, lower low, lower low. So I can count those, right? And then I get a trapped X box, has a ball on it on top of that with a reversal bar. I got a long trade. Does that make sense? It was going down, going down, going down. Now, would I compare the 2,000 number to the 430 number? Like I said, it has to be 80% is the max, ideally 50% or less. But would I compare this number to this number right here? Would I compare this uptrend number to this number that was part of a downtrend? No, and that's the big mistake a lot of people are making, is they're comparing the wrong OD numbers. Now, can I compare this number to this number? Yes. And we get, check it out, a trapped X box, and we got a cluster, and we got a mini magnet right at a 0.25 deb. Heck yeah, I'll take the trade and go short. There's a good setup right there. One of the questions that's coming up is, how do you get the percentages on there? So you go in, your indicators, and you choose oscillation detector to somewhere down here. Let's see. There it is. And then right here, you can go on and you can say show percentage from previous pivot to true. Okay? Right there. It's like number 3, part 6. Now, it shows it from the previous pivot, but do we always compare to the previous pivot? No. So that's very important, is you don't always compare. It's got to be in an uptrend or a downtrend. You don't need the percentages. They're just there if you want them. I changed mine to white, like pink and yellow. Yellow means that they're close. So check out on this screenshot here. I don't like the black. It makes it harder to see. So I changed the color on them. But yellow means it's very close. We like them when they're close. Yellow is like a bonus. So white and the other color don't really matter. If you click on them, you can see what the definition is. Hold on, I got a couple questions here. So divergence trading, I want you to remember, is for trend trading. It's a push and a pullback, then another push further. Remember this to keep yourself out of looking for divergence in ranging markets. If DR is going red, green, red, green, red, green, red, green, red, green, are you probably looking for divergence? DR doesn't have to agree when you're doing a divergence trade. That's right. Like if you could draw a box around the market's movement, like right here, don't look for divergence, right? So, or as John would say, if the clock were between 9 and 3, don't look for divergence. So this is like, it seems to be sometimes the hardest concept. Yeah, the deviation reversal uses a statistical, sort of like live deviation levels. When they get pulled so far, they're going to pull back together. So statistical intraday deviation levels is what they are. All right? But I mean, I would even put more focus on just your OD. When you get both of them, great. When everything lines up, you got to trade. I mean, the one that we had this evening, I don't remember. Well, I got NQ up. We took it on the ES. But anyways, are y'all getting the idea right here? And put the percentages up. Maybe that'll help you notice it a little bit more. I don't actually worry about double clusters. That's one of the rules on divergence trades. If there's double clusters, we don't care on OD divergence trades. Okay? Where you're really going to be worried about double clusters is on like TX trades, normal just TX trades. That's where they're going to really come into effect. Okay? Everybody with me so far? Does everybody get divergence? Because you got to get divergence before you can get hidden divergence. Any questions? All right, just making sure you're all awake. All right, so now let's talk about hidden divergence. Hidden divergence is an indicator on the sniper chart template. It marks a trend that pulls back with more strength but a smaller move in price action. Market does not go far on more. It's a potential sign of trend continuation. Standard divergence moves with less strength but a bigger move of price action. Market goes further on less, potential sign of a pullback of a trend. Okay? We look only for HD in trends. Entries combined with HD can often be great moves, especially off of levels, like when we get an 8 hidden divergence off of a level. They can often be bigger moves that are more than just a scalp. especially when they're off the level. And a pullback with extra strength ready to shoot off the back of an existing trend direction. So it looks like an archer pulling back the box with extra strength and releases the arrow to let it fly. All right. So let's see here. So right here at 1322. Does everybody understand the bow and all that? Yeah, it's pulling back. So we're in a downtrend. And we pull back, even though it's shown with the indicator at 1022 here. Then it continues further. Hold on, let me see if I can find a better example for you. Because me and John have two different ways of showing this. All right, so Christopher, I'm sort of scrolling through these, and I want to see who can spot any of the hidden divergences. Because there's two kinds of hidden divergence. I can't really move it up. I can move it back. You mean back? There we go. Y'all are starting to get it. So, John, you're on too, all right?
Yes, sir. I'm here.
All right. So we have a couple different kinds of hidden divergence. So I want you to go through on these charts.
Sure.
And talk about hidden divergence on this chart, because I want y'all to get more than just my perspective. Hold on, so I can record your audio. Okay.
Okay. Sure. Yeah, guys. When it comes to hidden divergence, there's a couple ways to look at it here, and I'll show you kind of my view of it. And Daryl, just let me know when you're ready.
Go ahead.
Okay. So, like on this screen here, for example, clearly we're in a downtrend. Yes. As we know, hidden divergence. Standard divergence is a potential exhaustion of a trend. It's running out of steam. Hidden divergence is a potential trend continuation. What is the one thing we know about a trend? Is that the market doesn't normally go from point A to point B in a straight line, right? It comes down, pulls up, comes down, pulls up. Okay, well, on this chart right here, if we look up there at the very top where you see the OD number of 682, and the market comes down a few bars, makes a little pull up there. Comes down several bars, makes a little pull up. Comes down several bars, and then makes that pull up right there. Okay, so do you guys see? And here's a little something that some of y'all may not know, and I don't want to take any thunder from Daryl.
Go ahead.
But you guys are all familiar with the triple dipper trade, right? And you look for the little logos right there. Okay. Well, do you know what those logos are? Daryl, will you point to those three logos right there that are on that last bar? Do you see that right there? Guess what that's telling you is in those couple of bars right there? Hidden divergence. That's a hidden divergence. One of those is a hidden divergence indicator, okay, the darker one. All right, so what that is showing you is there's hidden divergence in that pullback. What does that mean? Well, what it means is that pullback of the market right there had more momentum and more volume in that pullback than the last pullback did, okay, based on certain indicators here. Okay, so it's kind of like the archer pulling back the bow with more strength to let that arrow keep going back in the trend direction. Okay, does that make sense in general? It was kind of like we're going down, we're waiting up, we're making a pullback, we're getting some strength here, and we're going to shoot back down. Okay, does that make sense? And that's what hidden divergence is, and it's a sign of a potential good trend continuation. Let me show you a little bit different example. Daryl, we go to that next screenshot.
Yep.
Is this the first? I've got it in front of me too. Is this the first one? Let's see here.
If I get it to change. There it goes.
That one. Okay. So now let's look at this chart here. Okay. And starting from the left side of the chart, going towards the middle, are we in an uptrend? Are we in a downtrend? Are we ranging? We're in a downtrend. Very clearly, right? So look at where Daryl's mouse just was, that first pullback. So the market comes down and it makes that first pullback right there. You see that? Do you see on those bars, do you see those logos on those up close bars? You do not. On the next, so the market goes down a little further, then it makes that next pullback. Do you see the logos? Boom, hidden divergence. Why? Well, that pullback right there, did it go as high as the last pullback? Price action. Did price action reach back as high as the last pullback? It didn't. But look at the OD on the first pullback. How much OD was in the very first pullback? 496. Okay. Now tell me the next pullback. 1,000. Twice as much of a pullback, twice as much energy, twice as much volume, twice as much momentum, but even with twice as much power, it couldn't even go as high, could it? Does that make sense? It had more energy in the pullback, but still couldn't make it back up there. So, and then it hits what? Exhaustion, trapped order, reversal, go. Does that make sense? Do you see right there the big difference between regular divergence, which is going further on less? Hidden divergence is going less on more. Does that make sense? It had more volume in the push back up, but bam, rejected, couldn't make it. Even on twice the volume, it couldn't get back up as high. That's hidden divergence, which is a sign of, even though they're fighting to push it back up the other way with a lot of energy, we're saying, nope, sorry, gotcha, sucker. We're still going the same direction we've been going. Trend continuation. Okay, do you see the big difference there? It's not about I'm pushing and pushing one way and I'm getting worn out. It's we're not done going this way. You could come in and try to push against us hard, but we're just taking that as a nice little pull on the bowstring, and we're releasing that arrow to keep going. Okay, so do you see that difference there? Does that make a little more sense?
Yeah, the DR doesn't matter on hidden divergence.
There we go. Okay, so
1,000 bar was a lower high than the 496 bar. If it was a higher high, then it wouldn't have been hidden divergence. It wouldn't have been anything.
Right. If it was a higher high, that means that that extra momentum that came in pushed it higher than the last high, and we might be going another way. Calm down. But when all this extra volume comes in and still gets rejected, can't even get back to the last high, be ready to keep going.
So on this, you're more looking for it to be like a double the number instead of half the number.
Right. And it may not always be, but yes, it's the
Yes.
opposite of before, wanting 50% or wanting 100%. Heck yeah. You give me a trade like that, that's a downtrend, twice the volume, couldn't get up there. I've got, you know, the triple dipper, which is technically also hidden divergence. I got a cluster, and then I've got trapped order, Xbox, not too far away from a ZOI and a Paul. Get out of my way. I'm taking that trade every day.
So that's actually giving you a confirmation on the triple dipper to know if it's a valid hidden divergence with that volume. And you don't have to have the triple dipper for hidden divergence, right?
Correct. You might just have one. Like you might just have the hidden divergence itself.
Like the orange icon.
Right.
The
Okay,
orange icon is the hidden.
Yeah. And I think we've got another one or two examples here. Let's see.
And so you think middle of range, really you're making a lower high, or lower low. You made a lower high, you had hidden divergence, you had a triple dipper, you had an Xbox, trapped Xbox, and you had a lot going in your favor to take this trade short.
Yeah, when you get the lower low and the lower high and that lines up, that's not range to me, right?
So it's still diverging at this point, and then so the person asks, why are there still logos going down? Well, because compared to this last one, it's still diverging. And then it widens up on the divergence.
Yeah. Yeah, because the indicator doesn't know.
Orange.
Right. The indicator doesn't know if the market's trending. All it's doing, like big warning here. Okay. Daryl, where that second lower low where the OD is 419.
Yep.
The two bars before that. You guys see those two right there? You know what those are? That's divergence. You have a divergence warning on your chart. Did you know that? That means at that point of time, while those are plotting, that leg of the trend is divergent. Now you'll see that they sometimes go away because it's no longer divergent. Okay.
But you get divergent, 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 and then look, reverse. Divergent.
Right.
So if you were trailing, you could actually use this to tighten your stops.
Yeah. The indicators do not know whether the market's trending, range bound, or whatever. All the indicators are doing is comparing the last leg to this leg. So don't just automatically, oh, I see a logo symbol there, I must be divergent, or I must be a hidden divergent. You still got to look. It's just a heads up to look and see. You still have to verify that the trend is happening. You still have to verify that the setup is happening. It's just there as a, hey, heads up, okay? So don't just automatically do it.
So you can take a hidden divergence trade against a divergence trade. So the question was, this was divergence, so would we not take the hidden divergence? No, you would take the hidden divergence trade. Especially with everything you have stacked up on it. You have eddies, you have Xbox.
Right. Yeah, I mean, there have been times we taught you don't keep taking another trade in the direction of the trend. Don't take the next one after a divergent. But if you have divergence and then boom, hidden divergence, that offsets it. It's like, oh, we ran out of steam when we tried to go, you're rejected. We're not done. And the market says we're not done. Listen to the market.
Is the TX required? Yes. Remember, that's that adding that edge, that part of that sniper. You want to add you want to have the hidden divergence, but you want to add the edge. Because you can end up getting double and triple divergence and all that stuff. So you want to add that edge, which is that exhaustion with those trapped orders.
Stacking the odds in your favor. Like Daryl just said, like that trade right there. Is that a TX trade? Yes, 1. Is that a triple dipper trade? Yes, 2. Does it also line up with a hidden divergence trade? Yes, 3. And is it just a few ticks away from a paw on top of a ZOI? Yes, 4. What more do you want? Is there a obstruction right below it within 10 ticks? No. Yeah, that's where you, yeah, exactly.
So it's adding those, and some of you get caught up in like, okay, this is a number 2. Okay, this is a, this is a this. But when you start looking at them and you can start seeing all these things adding up, that's actually how you get your 3. Some of y'all have those days where I'm calling trades and I'm like winning, and you keep taking these trades in between the trades I call and you have a bad day. That happen to anybody? Never.
Yeah, and for those of you that know what a hugger or MMC is, yes, it's all that too. But you know what this is, guys? You hear Daryl say this all the time. Is this a possibility trade or a probability trade?
And the more of those things that add up together, the higher the probability. Like it's not just a TX. I mean, there's actually like 5 things added up I see on the chart. So that add up together to make that trade a great trade. We don't usually take trades with the trend when there is OD divergence. But when there is HD divergence, we can go against that. So the difference between you taking a lot of like every single trade and me taking other trades, it's just like today when there was a ES trade. Let me see here. Let me move this for a second. Right here, there was a third bar swing at 2023.48. Okay. We look over here at 2023.48. What is NQ going right into? A wall. Does NQ seem to respect those walls pretty dang well? The markets seem to move together pretty well, like ES and NQ on most days. So there's a good chance NQ is going to bounce off this wall, right? Like it's literally, that's the entry time. So I'm like, don't take this third bar swing. It's going right into an NQ wall. And then I see a short set up and I'm like, get ready to go short. Let's go short because guess what? We're coming right off of an NQ wall. So that was like an adding the probability together for me. So I put 2 things together and I got a higher probability trade. Does that make sense? We go down here, we get OD divergence. We get a trapped X box with a cluster coming off of a flux pivot, off of a 0.25. Yeah, that's a great trade. So the more you can add up and see on the screen, not just looking, I mean, the first thing is to remember, identify the target, right? That's the first thing I teach you to do. Identify the target. But you also got to identify what's around it. Like, is there more that makes it even better? And that's a lot of what we're trying to teach you right here with like the hidden divergence. Let's see here, Jonathan, you got another couple examples?
Yeah, and just one thing I wanted to point out. Can you go to the very, I think there's 4 slides I have there. Can we go up to the very first one?
There you go.
Okay, yeah, so go down 1. All right, I want to point something out here. Okay, so everybody sees this HD trade around 1322, right? We've got that pullback. We're clearly trending. We've got that pullback. We got the triple dippers there that actually shows that we got the trend down. Great. Okay. Look at the top of this chart and see the date. Yesterday. Okay. Go to the next slide. Now, I know not all of you trade all day long and whatever. I'm not telling you to do that, but look at the next slide. Okay, we've got the HD there around 951. Okay, so we've got the market coming down and then up the next one over.
And then it goes right there. Yeah.
Right there. And also, so we've got the triple dipper there that shows the HD. We've got the trapped X box, also a cluster, also a mini magnet, not too far off from an NQ level. Notice the date at the top. Same date, yesterday. Let's go to the next one. Now this is the one we spent a little time on right there already. Talked about how there's 4 or 5 things going on right there. See the date at the top? Yesterday. Next one. Next screenshot here. We've got trend going. We're right in the middle there, pulls back. We've got HD very clear. We've got a trapped X box. We've got a cluster. We've got a mini magnet. We've got a low volume score on the bar before it. And also what's right in the middle of those 2 bars. Does anybody see that crash? 2 ZOIs right there. So trend 1, TX 2, cluster 3, mini magnet 4, crash 5, low volume score, triple dip stack. I mean, do I got to keep going? Yeah,
DR6.
Yeah. And the date, yesterday. Anybody have a rough day yesterday? Anybody have a rough day in their Lilu yesterday? Anybody have no patience yesterday to wait for these things to line up to take the best of the best of the best? And there was more than this yesterday, by the way. I just didn't keep getting them.
Yeah, that's 11. This is like 950. One before that. About 9, yeah, within the same like 10-minute period.
Yeah, and the other one was a little later. And there was more. So
Eastern
do you
time.
see, yeah, Eastern time. So do you see how not only are, oh wow, that hidden divergence is pretty cool. And oh wow, I kind of have an indicator there that kind of shows it to me. And oh wow, I only got to look for it in a trend. And oh wow, those trades were like, excuse my language, but I won't say it. They were awesome, right? All this stuff lined up. Those were great trades, kind of like, good cover, good aim, good weather, good visibility, good terrain, good sniper. Or did you have a rough day because you were being an infantryman and shotgunning all over the place because you wanted to press a button? Patience pays. And I see so many of you in here going, oh my God, oh wow, I see that. I never put that all together. It was this trade, it was all this combined. Wow. They're there, guys. They're there. So anybody probably going to start looking at these tomorrow in the elite room, I'm guessing? Now, if you're in the elite room tomorrow and you've got the market ranging up 7 bars and down 5 bars and up 7 bars and up, should you be stressing looking for HD? No. But when the market, because what is that? That's range bound. That's tight. That's chop. You've heard me teach this before. The water hose is on full blast and you just kinked it, right? It's in the kink. It's all just there. But as soon as that first burst happens and a new trend's established and then a pullback and then a push, start looking for these things. Look for divergence and hidden divergence. Yeah, with Chris, the trend or against the trend.
Chris asked, there's plenty of liquidity, especially during the morning to get these things filled. Just you need to put your order in manually to make sure you get it filled. That way it's in there in advance.
Doug, you're asking about somebody, you're asking do triple dippers work on ES? Well, keep in mind, we're not talking about triple dippers in and of themselves right here. One of the three things that makes up a triple dipper is hidden divergence. So we're not just talking about triple dipper trades. On ES, if you, and I can pull up an ES and look for it, but if you see a trend and a pullback with hidden divergence that then has a reversal bar back down in the trend that lines up with a sniper trade and all other rules apply, yes. ES, NQ, any market, hidden divergence is something you want to look for. Don't make this about triple dippers by itself. Just one of the things that make up triple dippers is showing.
And a triple dipper doesn't even have to be there to take an HD trade. It just helps confirm the triple dipper if you have HD also. You there, John?
Yes, that is correct. Sorry, my mute button got hit. Yes. So where is HD on this page we're looking at right here? It would be right here on this bar. There was hidden divergence. There was a lot more. Oh, you can't see my, yeah. Actually, to the left, that bar, the up close bar with a 4 on it, okay? Those two up close bars there, and you see it there on that second bar, there was more volume and push in that move up than there was in the last move up. Okay. And no, this is not part of markers.
Now, it may take the trade anyway because you have like a TX short.
Right.
Going with DR in this case. Okay? So it's not that it won't take the trade. It's just this gives you a lot more confidence on that trade to take it. Whereas maybe you're like, I don't know, it just hit the 0.25 and it's coming up and yeah, well, you didn't know there was a lot of other stuff saying go, go, go.
Can you get a double HD during a trend? Yeah, you can actually. You can have, a push down in the market, like, a pullback in the market that was a lot more volume than the last pullback, and then you can have that happen again. If the next pullback is even more than that last one. Now, after 2 in a row like that, let's say that's a good question. If you had, say, a couple in a row like that, or especially like 2 or 3 in a row like that, I'd be hesitant. For one, you're probably really deep into that trend. And for two, after you have a couple of those pushes, you may not be expecting another big push like that without a little bit of a stall out and a little range bound and then another breakout. Okay. You won't normally see them happen over and over again. You might have 2 of them that happen in a big push down, for example. Then the market goes into range, kind of like a little bit of accumulation mode to build some steam to push down some more. Okay. But you won't always have a ton of them in a row. You might have a couple, then a little phase out, and then another push.
Now they can be equally either side.
Yeah. Up or down either way. I'm just saying down because the example we have in front of us, but uptrend or downtrend, same rules, same everything. Still need a trade setup. Okay, we're not talking here about taking HD trades alone. Okay, still want to combine them with your sniper trade and stack those odds and stack those edges in your favor.
All right, y'all get it?
Especially in some of these trending markets we've had, not every day is moving like this, but the days that do, keep an eye out for these. So, all right, guys, I will hand it all back to Daryl. I'm going to mute out here.
Let's focus on this way to look at HD for tonight. I don't want to go into too many ways. There's two ways to look at it, but that is one of the main ways to look at it. And I want you to notice he looked at the top OD numbers for HD. When it was going down, he'd look at the bottom OD numbers for HD when it was going up. Okay? Does that make sense? So you're going to have the opposite side on OD versus HD. All right, well, hopefully this was an awesome training for y'all. We wanted to give y'all something really cool to come back and see and clarify this. So this is one of the HD setups, and I will get this posted up on the website. Remember, be the sniper or be the target. Have your patience. Make the choice when you're going to trade to have that patience and look for those higher probability setups. All right, y'all have an excellent evening, and I'll see you tomorrow morning in the trade room. Good night. Oh, that was good. Wrap it up.